Currently, the economy of Germany is a highly developed social market economy. It is the largest economy in Europe and the third largest in the world. Germany is the founding member of the European Union and the Eurozone. However, right now you will see on the news that the German economy has shrunk in 2023. So how did Germany become the biggest European economy? Why German economy is in trouble now? And how long the economic trouble will last for Germany? The history of Germany says the Industrial Revolution in Germany began approximately a century later than in the United Kingdom, France and Belgium, partly because Germany only became a unified country in 1871. By 1900, Germany surpassed Britain's steel production and became the largest producer behind the United States. The German economic miracle was also intensified by unprecedented population growth from 35 million in 1850 to 67 million in 1913. By 1913, Germany had come to dominate all the European markets. The German chemical industry became the most advanced in the world, and by 1914, the country was producing half of the world's electrical equipment, and Germany had become one of the biggest exporters in the world. If we look at the recent past, before the COVID-19 pandemic, in 2016, Germany recorded the highest trade surplus in the world, worth 310 billion US dollar. This economic result made it the biggest capital exporter globally. Germany became one of the largest exporters globally with 1.81 trillion US dollar worth of goods and services exported in 2019. The service sector contributes around 70% of the GDP, industry 29.1% and agriculture 0.9%. Exports accounted for 50.3% of national output. The top 10 exports of Germany are vehicles, machinery, chemical goods, electronic products, electrical equipments, pharmaceuticals, transport equipment, basic metals, food products, rubber, and plastics. The economy of Germany is the largest manufacturing economy in Europe. Germany is rich in timber, ignite, potash, and salt. Energy in Germany is sourced predominantly from fossil fuels, about 30%, with wind power in second place, then nuclear power, gas, solar, biomass, and hydro. Germany is the first major industrialized nation to commit to the renewable energy transition called Energiewende. Germany is the leading producer of wind turbines in the world. Renewables produced 46% of electricity consumed in Germany. Of the world's 2,000 largest publicly listed companies measured by revenue, the Fortune Global 2053 are headquartered in Germany, with some well-known brands worldwide like Allianz, one of the world's largest insurance companies, Munich Re, also one of the largest insurance companies, Mercedes-Benz, Volkswagen, and BMW, among the biggest car makers in the world. Siemens, the world's biggest industrial machinery company, BASF, the world's second biggest chemical producer, and SAP, Europe's biggest software company. Till pre-pandemic, the German economy continued to be stronger relative to other European countries. However, the German economy did not continue its recovery from the sharp economic slump during the COVID-19 pandemic year of 2020. In 2023, Germany experienced economic difficulties due to various reasons, and one of them is the closure of Russian natural gas resources due to Western sanctions. Following the Russian invasion of Ukraine, Germany imported 55% of its gas from Russia when Russia started the invasion in 2022. Amid a global energy crisis, Chancellor Olaf Scholz committed to weakening dependence on Russian energy imports by halting certification of Nord Stream 2, while also committing to his long-term predecessor Angela Merkel's policy of phasing out nuclear energy. The International Monetary Fund predicts Germany is the only G7 economy that shrank in 2023 by 0.3%, and at 0.9% growth is expected to remain well below the average of 1.4% for advanced economies in 2024. Since the war in Ukraine started in February 2022, the German economy has grown in only 2 out of the last 6 quarters. Even worse, the economy remains hardly above its pre-pandemic level more than 3 years later. The National Statistics Office said multiple crises contributed to a 0.3% fall in GDP in 2023 compared with the previous year, as higher interest rates and elevated living costs took their toll. At a press conference in Berlin, Dr. Ruth Brandt, the president of the Statistics Office, said despite recent price declines, prices remained high at all stages in the economic process and put a damper on economic growth, and added that unfavorable financing conditions due to rising interest rates and weaker domestic and foreign demand also took their toll. Germany is on track for its first 2-year recession since the early 2000s. Germany's dominant industrial base, excluding construction, fell by 2% over the year as higher energy costs and dwindling demand at home and from abroad weighed on factory output, reflecting the impact of higher energy bills and borrowing costs on consumers. Household consumption fell 0.8% on the previous year, while government spending fell 1.7%. The German economy has faced severe headwinds since Russia's war in Ukraine sent inflation, particularly the cost of energy, soaring. The price spikes contributed to a steep downturn in Germany's energy-hungry manufacturing sector, while the construction sector also took a hit. Increasing competition from China, once a reliable destination for made-in-Germany goods, as well as aggressive Eurozone rate hikes to tame inflation further, having one of the worst performances among advanced economies last year and expected to experience one of the weakest performers in 2024. EU forecasts published in November 2023 predicted growth of 0.8% for the German economy, and Germany's Bundesbank central bank recently forecasted growth of 0.4% in 2024. And another expert, Andrew Cunningham, the chief Europe economist at the consultancy Capital Economics, said the recent fall in inflation should provide some relief for households, but residential and business investment are likely to contract. Construction is heading for a steep downturn and the government is tightening fiscal policy sharply. We forecast 0 GDP growth in 2024. ING Bank economist Karsten Brzezinski is less optimistic, pointing to fresh uncertainty stemming from the German government's recent budget upset and shipping delays in the Suez Canal as a result of the conflict in the Middle East. Karsten Brzezinski, the global head of the macro research at the Dutch bank ING, said there is no imminent rebound in sight and the economy looks set to go through the first 2-year recession since the early 2000s. Added, we expect the current state of stagnation and shallow recession to continue. In fact, the risk that 2024 will be another year of recession is high. Concerns about slowing exports and the slump in the crucial manufacturing sector, coupled with the chronic shortage of skilled laborers, have begun to raise fears of a deindustrialization in Germany. KfW chief economist Fritzi Keuler-Gabe said, we see a silver lining for the economy in 2024. She further added, thanks to a strong real wage growth, private consumption in particular is likely to pick up again. Together with an expected recovery in export demand, gross domestic product is likely to grow. The German government is also struggling to overcome a budget crisis that threatens to intensify problems in the worst performing major developed economy. This weak growth performance of Germany has a long list of explanations. There is the cyclic headwind stemming from inflation, high energy prices and uncertainty, higher interest rates, and China's changing role from being an export destination to being a rival now that needs fewer German products. But there are also well-known structural challenges ranging from demographics to energy transition and fewer investments. Germany faces structural challenges such as an aging population which can lead to a shrinking workforce and increased pressure on social welfare systems. Additionally, structural rigidities in the labor market or regulatory burdens can impede economic dynamism. Germany, like other industrialized countries worldwide, is facing deep labor shortages, particularly in skilled high-growth sectors. Official estimates suggest Germany's aging society will be short of 7 million skilled workers by 2035. Looking forward, neither the cyclical headwinds nor the structural challenges will likely disappear or change soon. Structural weaknesses have built up over at least one decade, and it's therefore close to impossible to see a swift turnaround. Therefore, the German economy looks set to remain in the twilight zone between minor contraction and stagnation not only in 2023 but also this year. Economists say the budget uncertainty and the possibility of reduced spending worsen the challenges facing the stagnating German economy as it struggles to adapt to long-term challenges such as a shortage of skilled workers and the loss of cheap natural gas from Russia after the invasion of Ukraine. Trade dynamics, changes in international trade agreements, tariffs, or geopolitical tensions can affect German trade flows and export competitiveness. Germany, being one of the largest exporters in the world, is heavily influenced by global economic trends. Economic slowdowns or recessions in major trading partners can affect demand for German goods and services. Weak global growth, particularly in China, and high interest rates are expected to reduce demand for German exports. Also, shipping disruptions in the Red Sea and escalating tension in the Middle East could further affect the trade. Germany's economy is closely linked to the wider Eurozone, and challenges within the Eurozone such as the high levels of public debt in some member states or banking sector vulnerabilities can indirectly impact Germany's economic performance. Also, transitioning to a more sustainable and environmentally friendly economy might require significant investment and adjustments which could temporarily weigh on economic growth. The German government is searching for ways to fill a 65 billion budget gap this year after the country's constitutional court ruled that the government could not repurpose unused funding meant to ease the impact of the COVID-19 pandemic into projects to fight climate change. Now the bigger problem is the government can no longer borrow the money and spend it. That means cuts in the Climate and Green Transformation Fund, which spends on projects that reduce emissions from fossil fuels. Those include renovating buildings to be more energy efficient, subsidies for renewable electricity, electric cars, and railway infrastructure, efforts to reduce emissions-free hydrogen as an energy source, and support for energy-intensive companies hit by high energy prices and for computer chip production. As of January 2024, Germany became third largest economy in the world after the United States and China, and the largest economy in Europe due to Japan's economic difficulties. Germany is also the third largest export nation in the world. Thanks for watching.